Hey gang, markets are becoming bullish once again, earnings are behind us, and I've been getting a lot of questions asking me, what's next? What's the next catalyst? What's the major move? Where are the big levels coming from? I'm going to answer all of those questions right now in today's video. So the first question is, what's the number one factor driving stock prices right now? For some of you who don't know this, the biggest factor that drives stock prices is global economy. It's not earnings, it's not Fed news, it's global economy. Currencies and interest rates is what drives stock prices. Right now, there's a major influx with China. We have a trade war. Chinese currencies versus US currencies are in a big entanglement. It's going to take another quarter, maybe two, to get it all straightened out. Till that time, the world is in a hurry up and wait attitude, okay? Nothing is happening. The market's going to be sideways. We may see a little upwards bias, but I'm not expecting anything major till the trade war gets resolved. What if you didn't have to stress out over any market moves? I don't, and I'll tell you why. So the next question is what price levels we should be focused on the Dow. And that's a great question, and I'll tell you why. Because I believe the Dow is going to be going sideways, moving up and down within a tight range till the global economy gets resolved. Now, let me tell you what that range is because it's important. The low, the moving average, the 200-day moving average is at about 25,140, give or take a few points. But right around the 25,000 level, that's where the major support lies. And the major resistance is just a hair above 26,000, probably 26,100. So what do I believe? I believe stocks are going to fluctuate for the next quarter, maybe two, between 25,000 and 26,000, which should give us an amazing trading range for swing trading. The next question I want to tackle is, what are the strongest sectors? And that's an amazing question, and I'll tell you why. Right now, because of the global trade war, everything has to do with the global trade war right now. Markets are defensive. What does that mean? That means you have to focus on defensive sectors, utilities, real estate. Those are the sectors you want to focus on, and sectors that have a very low correlation with China, like healthcare. So healthcare, utilities, and real estate. Those are the three sectors you want to focus on, and those are the three sectors making all-time highs right now. And the last question that I want to address is, what are the stocks with the best risk to reward parameters? As I said just a minute ago, I'm looking at defensive stocks. The two sectors I would be looking at right now would be real estate and utilities. For utilities, I like Duke Energy. Volatility is low, the stock is making 52-week highs, it has a very stable risk to reward parameters, and option premium is low. Avalon Bay is a real estate, it's a REIT, it's a low interest rate favorable stock, and it's defensive. Highly recommended. Again, I don't know what these stocks are going to do. I don't have positions in these stocks, but they have very favorable risk to reward parameters, and I highly recommend them for investors over time. If you're tired of stressing out over what you should be trading, then sign up now below this video for my free workshop, where I'll teach you how to spot explosive stocks and options the instant before they pop, 420%, 385%, or even 1,453%.